Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from the CNBC TV18 Prime Ionic Wealth Studio. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. A fourth straight winning session, by the way, on the Wall Street, largely aided by the rebound in the tech stocks. The S&P 500, Nasdaq and the Dow are pacing for their best week since late June. The broad-based index is up more than 3% week to date, while the tech-heavy Nasdaq and the blue-chip Dow have risen more than 4% and more than 2% in their weekly period, respectively. The markets across Asia Pacific, in the meanwhile, are tracking those gains from Wall Street, and you can see a sea of green amongst there. Meanwhile, the prices of crude oil continue to hunt for a floor amid ongoing prospects of a peace plan between Russia and Ukraine. The prices are now on track for their fourth monthly decline this month. In fact, prices also are on their worst losing streak since the year 2023. Take a look at the dollar index, and that has declined sub-100 levels on mounting bets over a Fed rate cut in December. Adding to the uncertainty over the Fed are the macro concerns brewing in the U.S. markets. Let's focus then on the agriculture space as well. And while we have seen all-time highs come in for gold and silver this year, and the base metal prices are trading at a multi-month highs as well, it is the agriculture as a sector which has seen a bit of a decline when you look back at 2025. Joining us now is Siraj Hussain. He's former Agri Secretary of India and talks to us about on what prices, seed bills and what is that agriculture as a space could be looking like in the year 2026. Mr. Hussain, thank you so much for your time. And I want to take a step back, first of all, and look at the year 2025. Agriculture inflation was one of the things that did not really bother the economy, not the regulators as well. But would you say that is something that we can expect going forward for the next year as well?
It is very difficult to say in times of climate change as to what will happen next year, but generally speaking, the forecast is that the prices of agricultural commodities will remain benign. There has been very good monsoon in India, and the sugarcane crop in Brazil is also expected to be very good. And if Russia-Ukraine war can be stopped, for which efforts are being made now, then the production in both Russia and Ukraine will also be higher. So generally speaking, we can say that the prices are likely to remain quite stable going forward to next year if weather conditions do not deteriorate.
Mr. Hussain, the other thing really is about the biofuels, really, because we do understand that the global veg oil, almost 25 to 35% of that is now going into biofuels. What with US is doing and Indonesia, etc. How are you reading into this trend going forward?
I'm not very happy about food stuff going in for manufacturing ethanol or biodiesel. Now Indonesia is a highly surplus country as far as palm oil is concerned, and they do not know what to do with that palm oil, so they are using it for biodiesel. Similarly, Europe, with its huge dependence on petroleum, is also using palm oil and other foodstuffs for manufacturing ethanol. Even in India, which is an importing nation for both edible oils and pulses, the government has been promoting the use of food grains like maize for consumption for manufacturing ethanol. I do not think for a country like India, and or other countries which are not hugely surplus in food to manufacture ethanol, they should first be concentrating on providing food security of all kinds, not only carbohydrate security, but also proteins and edible oils, so that whatever cultivable area is there in the country is primarily used for food.
Just coming to food yet again and talking about rice, Mr. Hussain, for the Indian markets, we're looking at a bumper crop yet again. If the first estimates from the government is anything to go by, would you say rice is a problem of plenty or not really? Because the kind of export numbers that the industry seems to be clocking in are quite on the positive side.
150 million tons of production is very much on the higher side. And one reason why the farmers are incentivized to grow rice in several states like Odisha, like Madhya Pradesh, Chhattisgarh, is a very good price they are getting for producing paddy. For example, the minimum support price for paddy in India is 2,400 rupees per quintal. But in several states, I mentioned three of these states, the price they're going to get is 3,100 rupees per quintal. So obviously there is very good incentive for producing rice. And in Bihar also we may see uh, diversion of area from maize to rice, because the reason is that this year the farmers have not received good price for maize. Against the MSP of 2,400 rupees per quintal, it is now being sold at 1,800, 1,900 rupees per quintal. So, the incentive structure supports production of more rice. And as a result of all this, the government is giving rice for ethanol from its own central pool stocks at 22 rupees 50 paisa per kilogram. Quite ironic.
Yes, it is. With what is happening in the international markets as well is yet another thing to watch out at, Mr. Hussain, because gone are the days of multilaterals. We do understand that it's BTAs and FTAs, and there's a list of countries that India seems to be talking to right now, including the US and India trade agreement, which we do understand would happen at some point in time. How would you look at food as a component when India is talking to so many countries?
Actually, the government has been quite, concerned about the interest of the farmers, producers, and therefore, one of the reasons for delay in reaching an agreement with the US is this. Now, India does not allow production of genetically modified food crops. The only crop for which it has been allowed in India is cotton. So there were a lot of reservations, and I think US also may have realized by now that these reservations are quite genuine, and India is not likely to compromise with that in the short term. Maybe in the long run, when Indian government itself, for domestic producers also, uh, permits the cultivation of genetically modified crops, then perhaps import may be allowed. But in any case, I think for food, every country requires to be food secure, especially a very large country like India, 1.4 billion people. So we have to take care of our food requirement. So the government policies do reflect that concern, and I'm happy about that.
Come to the seed bill now, and we do understand that India, when it comes to the overall world map, is perhaps the fifth largest as in sense of industry when it comes to seed. Here as well, we've been talking about a seed policy since 2006, and I was reading that article of yours. There have been consultations and more consultations. Do you think the bill 2025, the draft bill that is, would see the light of being called an act now?
I think compared to previous versions, this bill is an improvement. We have seen this in case of labor codes also, that compared to previous efforts, this effort was more acceptable to various stakeholders. So this time also, I think the seed bill has done a good job. And there are a few concerns, especially relating to compensation to farmers if the seeds sold by companies do not grow well. Similarly, the sale of seeds by the farmers' organizations like FPOs, etc. There is a concern that they should not be subject to same regulations which are applicable to commercial companies. So, for example, the seeds saved by farmer members of FPOs, they should be able to sell it to other farmers and FPOs, etc. So there are these things. I think the government may be talking to state governments. It will be a good idea, as I wrote in that piece, to build a consensus with the states and talk to farmers organizations, because this is need of the hour. India is also a very large exporter of seeds, and there is very good scope. Another thing, Manisha, is that a lot of seed in India is grown under contract farming. So we hear so much about against contract farming, but this is one area where contract farming has really taken off. So seeds, is the basis. Good seeds are the basis of good agriculture, high yield, climate resistant varieties, and so on. Therefore, this bill is important. But I only hope that it is not rushed through Parliament, by the force of brute majority, and efforts are made to reach a consensus.
I just want to come back to grains yet again. And there have been reports from WASDE and USDA suggesting that wheat is going to be at a record number this time around globally in sense of production, in sense of global inventories as well. Would you say, and talking about wheat and plus various other commodities as well, would you say that price going forward, I get your point about the weather, if that plays along well. Is there any concern really in any of the agricultural commodities that you see going ahead?
Actually, there is concern as far as India is concerned about pulses. and edible oils, because a lot of area is now 1 million hectare, for example, went higher, an additional 1 million hectare went for maize this year, this Kharif, in the expectation of better prices for ethanol. Now, that did not materialize. So, even though globally the prices may not rise too much, India is not a major importer of commodities other than pulses and oil seeds. So, these two remain area of concern. And I think whenever the agreement with the US is signed, then our rice will also find a better paying export market. So I think we need to reduce, in the longer run, reduce the area under rice and grow more protein rich crops, and also find a way of integrating the market. So today I am writing a piece on maize, for example, and I find that in Madhya Pradesh, maize is being sold by about 900 rupees a quintal, while in Karnataka, it is about 1800 rupees a quintal. So the markets are still not integrated, and ENAM seems to have a lot of scope of actually reaching out to more areas, more APMCs, and so on.
All right, there's a whole host of conversation. Mr. Hussain, thank you so much for joining in and talking about all of those important points that agriculture as a space clearly is going to be watching out for. But with that, we'll have to slip into a short break. Next, we will be joined by Ajay Arora, who is CEO at Ashika Investment Managers. Stay tuned for that conversation. Welcome back. You're with us at the Big C on CNBC TV 18 Prime. Joining us on the show now is Ajay Arora. He's CEO at Ashika Investment Managers. Ajay, hi, thank you so much for joining in. And, even before I get into the nitty-gritties of things, there are reports suggesting that there are 19.4 lakh millionaires that India perhaps would have by 2030. What is the details? What are the investment patterns and money deployment that you see here?
Thank you, Manisha, for asking me to join, firstly. If you see the pattern now, everybody is trying to find out where the wealth is going to be created rather than the income aspect or the growth aspect. And therefore, if you look at the whole particular perspective, people are hungry for ideas of products which will create wealth. So it can be on the private equity side, it can be on the alternative side. In fact, actually, that depends upon how things evolve, in fact. But at the end of the day, these are the things which people are seriously looking at, in fact. And given that what the international trends have been, in fact, at the same point of time, is exactly what India is also perceiving or trying to basically do the same thing, in fact.
Oh, yes. Ajay, it has been a growing segment, absolutely. And I get your point that it is wealth versus income that the market is looking at right now. AIF as a category has been increasing, and we've been talking about Gift City actually for the last couple of days now. I also spoke to the Gift City MD and CEO, and he did tell me on what the kind of number increase that they have seen, whether has been about at BFSI, insurance, AIFs, commodities, all of that has seen some surge come in. Talk to us about the AIF commitments, because when I'm looking at these numbers in the last 3 or 5 years, have seen a considerable growth come in. How would you look at these investments? Do you see this growth pattern continue?
Yes, of course, Manisha, because Gift City is one of the blessings, as far as you ask me, from the jurisdictional aspect point of view, and both from the inbound and outbound point of view. And as you said very correctly, if you look at the pattern in the last actually, uh, you know, 6 to 8 months, if I have to look at it, the growth has been almost about 40 to 50%, in fact, actually, whether it is in the Cat 2 or whether it is the Cat 3, in fact, actually, in both the aspects. And both ways people are looking, whether it is the outbound category or whether it is the inbound category. And we are at this point of time reaching about almost 8.9 to $9 billion on the outbound, and inbound has been almost about 1.5 to $1.6 billion. That shows exactly the type of the increment which is happening, in fact. And I see this trend continuing and growing, in fact, in the next 6 to 12 months also, because if you look at the markets, the way they are behaving, in fact, actually, this is actually giving an opportunity to think. And Gift City is a fantastic opportunity.
Oh, it is. Ajay, when you look at the rapid scale-up that we are seeing within this space, how would you say that the feeder structures and the global access do a role playing within that?
As I said, the gift city is a boon, in fact. So now people are able to participate in the international exposures, in fact, actually, and mitigate the risk. As we know very well, there's no point putting all your eggs in one basket. And this is an opportunity, in fact, for us to look at the international part of it. You look at Taiwan market, you look at the Hang Seng, which has gone in the last couple of months, in fact, actually. Look at the Japan market, which is booming, in fact, actually, including the US markets, in fact. So this is an opportunity for us to spread it out, the wealthy part, create the wealth, in fact, at the same point of time, and continue to participate in the Indian growth also.
How would you look at the Indian market growing or diversifying in last 10 years, Ajay, when it comes to alternate funds here, fixed income, etc.? Because India for the longest time has been stuck with equities. Yes, there are opportunities now, and there seems to be a lot of money making. Wealth creation, as you like to say, is what we've seen here. When it comes to portfolio diversification, and especially when it comes to wealth versus income, and I like that concept there, what is it that other investors also need to start looking into?
So, Manisha, I have been outside the country for the last 2 decades, in fact. And the only thing I feel probably is that the Indian investors at this particular point of time is hunger for products, in fact, because equity is definitely a class which has boomed over the period of time, but the diversification has to be there. We have talked about the precious metal, which has been growing also at the same point of time. We've talked about the debt market, but the depth is not there for all these markets, and therefore we need to have the depth of all these markets, which creates the liquidity, which creates a lot more investment opportunities at the same point of time. So I would actually say that at this point of time, Indian investors are looking for product, the product hungerness, in fact. And it can be, related to, as India we grow, we open up. And as we open up, the new products also open up at the same point of time. And therefore, it's a opportunity which I think, by 2030, if you talk about whatever numbers people are talking about, I think it's going to be beaten without a doubt, in fact, actually. Probably, we'll actually finish that number in 27, 28 only, and then probably new numbers will start coming in.
All right. Ajay, where is the bulk of money actually flowing in right now? And where is the strongest of institutional and HNI money also coming in when you look at many of these categories?
So private equity is definitely taking a big role. In fact, if you see the growth of the category two alternative investment, which is the private equity part of it, you will see the growth has been almost about 49%. In fact, actually, out of the total of 19 lakh crores odd, 70% has been on the cat two. In fact, actually, that shows exactly that people are betting on a long term and on the businesses. In fact, actually, so that's the one particular piece which is growing. The second thing which I think will be a big growth is going to be the data strategy, which is basically the quantitative funds. In fact, I don't think the country has actually touch base anything. In fact, we just have about maybe 3 to 5% of the assets in that, and that also people are using it as a tool rather than a strategy, in fact, actually. And I think that is going to be one particular boomerang which is going to happen. And we at Ashika, to be honest with you, are very, very focused on that, and we intend to take this particular strategy forward in a much larger and a bigger way, and to align also the same point of time with the international markets of that.
Ajay, I do understand that the Indian fund managers are seeking the global capital, but would you also say that there are also global investors assessing Indian markets? So if we are a launch pad for many, we clearly are a landing space for some too.
We are actually, as we say in the FMCG products, a test market. India is now actually becoming the capital market test market, in fact, actually. If you can make money here, you can make money anywhere, in fact, actually. So it's an opportunity which every foreigner wants to participate, but then they are wary about it. But once they do it, in fact, actually, then they don't go away. And we have the reality is there. In fact, actually, people those who came in, like say 20, 30 years, they still participate in the market in a bigger way, and they are the ones who make money rather than the fly-by-night operators.
Ajay, a final question then. And when you look at the Indian equity markets, we may be making near all-time highs, but when you look at the YTD numbers, it's not so much to show home about, and it's underperformed various other international markets as well. So would you say that portfolio diversification clearly has driven that point home?
I think, every market goes through a space of consolidation. If you go back year back, the Chinese market was getting consolidated, and in the 1 year of time, they've been able to give the return. I think we're just consolidating, in fact, actually, because the fundamentals are pretty strong. There's nothing wrong in the fundamentals of the country. In fact, whether it is on the growth front, whether it is on the EBITDA front, whether it is on the earnings quality growth which is happening of the companies, in fact, actually, whether it is the rate of the growth at the same point of time. So all the parameters are absolutely positive. And these are nothing but, every market goes through the cusp. We have had a huge IPO boomerang market. Look at the amount of subscriptions you're getting, in fact, actually. So flow is not an issue, in fact, actually. It's just that it is getting consolidated. And I think we are just getting ready to go to the next, let's say, double the market from here, in fact, wherever we are.
All right. On that very high note, Ajay Arora, thank you so much for joining in and making sense of wealth versus income. And clearly, there are way more opportunities right now, way more millionaires being created in the Indian space there. But with that, that's all the time that we have on this episode of Big C. Thank you for watching.